In this video, let me share some big updates that has impacted the stock prices of some big tech stocks and what they mean for their future growth. As investors, it's important to get regular updates on important news, especially of companies that you own or plan to own. And I know that not all of you have the time to monitor the business news. So I'm testing this out to see if this is something that you'd like to hear moving forward. Now, if you do, please hit the like button to let me know. If you're new to the channel, I'm Ronald, and I talk about investing in multiple asset classes such as real estate and the global stock markets. Let's get right into it. First up, Amazon Prime gets to 200 million members. So, in his last letter to shareholders, Jeff Bezos pointed out that we have more than 200 million Prime members worldwide. So it's crazy the number of Prime members they have. Amazon had its IPO in 1997 at a split adjusted price of $1.50 per share. Now they are at $3,300 per share. That's more than 200,000%. 200,000%. It's crazy to think about that. In 1997, they even haven't invented Prime. They didn't have all of these things. No AWS, no Alexa. So they just set out to build the world's largest bookstore, but now they are one of the world's largest companies. Looking at the timeline, Amazon Prime was launched in February of 2005. It reached 100 million members in April of 2018. That's 13 years and 2 months. Then it added another 50 million members in 1 year and 9 months. And finally, added another 50 million in 1 year and 3 months. So the growth for Amazon Prime is still accelerating. So I'm actually looking forward to their numbers in the next earnings call. And the next earnings call is on April 29, 2021. Interested to see what the impact of having 200 million members is to them. I foresee that there's going to be a huge jump on Amazon's international operations. So quickly heading over to eToro and looking at Amazon, today's price is at $3,399.44. Analysts are 100%. It's a unanimous consensus. Amazon is a strong buy with an average price target of $4,103. That's a 20% upside and a high estimate of $5,200 per share, low estimate of $3,700 per share. So Amazon is signaled as a strong buy, and I agree. I'm looking forward to the earnings, not to the I'm looking forward to their next earnings call and see what the numbers are. Next up, Apple is dominating the 5G market. So, in a Counterpoint research report, now Apple takes 6 spots in the top 10 best-selling models list for January. For January 2021, the best-selling phone models: iPhone 12, iPhone 12 Pro Max, iPhone 12 Pro, iPhone 11, iPhone 12 Mini, and iPhone SE 2020. So four of these are 5G ready. The iPhone 12 models are all 5G ready and they are dominating the 5G market. So in my last Apple stock analysis, the Apple deep dive, so I noted that Apple is entering a 5G super cycle. So more than 1 billion of Apple's iPhone users are going to upgrade their phones to 5G, and that is going to generate a lot of revenue, a lot of activity for Apple's stock price. It's going to be an exciting time, to own Apple stock. And Apple is currently at $134.16. It has a strong buy rating from analysts. 80% of analysts that cover Apple give it a buy rating, so that's 25 ranked analysts. Their average price target is $153.65. So that is a 14.53% upside on the current price. The highest estimate is $175 and the lowest is $83. So Apple is looking like a strong buy. I believe it is a strong buy because of the 5G super cycle, because of the growth of its Apple services, and the other interesting things that Apple is coming up with, like the Apple Car. Next up, Google stock or Alphabet stock has been upgraded. A Wedbush analyst recently added Alphabet to their best ideas list with an outperform rating. Outperform means it's a strong buy, and they have a new price target of $2,953 for Alphabet. That is actually higher than the previous target of $2,470. The new analyst is Igal Arunian, and so whenever there is an update, an upgrade in price targets or in performance, usually it translates to a favorable rating. So it's always good to be notified whenever there are upgrades from the agencies. So heading over to eToro, we can see that Google or Alphabet is at the Class C shares are at $2,297.76. The analyst average price target is 2,401, so that represents only a 4.5% upside from 10 ranked analysts, but all of them give a buy rating for Google, so that Google has a strong buy rating. The highest price target is $2,750. We have Tesla. Tesla stock was recently upgraded, and also on the news is a Tesla car crash. So Tesla was recently upgraded by Canaccord Genuity by their analyst Jed Dorsheimer. So he mentions that their battery innovations, cell design, and auto structural integration will widen its lead over their rivals. And Dorsheimer raised his rating on Tesla to buy from hold. Initially, it was a hold, but now he is giving a buy rating and boosting his price target by 155%. So to $1,071 per share. We're going to take a look at Tesla's current price in a little while, but Dorsheimer cited similarities between Apple's ecosystem. Moving over to eToro, Tesla has a current price of $739.78, but uh, analysts don't have a consensus, right? They are currently giving a consensus rating of hold. There are 27 analysts that give a rating on Tesla, and their median target price is at $701. So there is a 5% downside to buying Tesla stock right now. And I'm actually in agreement, with these analysts. I'm actually on a hold. So Dorsheimer is bullish on Tesla. Right now, I'm not so bullish at this point in time because if we look at Tesla's P/E ratio, Tesla is still at a very expensive 176 P/E ratio. It's going to take a few years for that ratio to go down. Right now, I just feel that Tesla is really overvalued at this point in time because they're pricing in Tesla's performance 3, 4 years from now. So what that means is 3 to 4 years from now, Tesla will stagnate. So I do believe that there are going to be opportunities to buy Tesla in the future. I could be wrong. That's fine. In the stock market, I'll be willing to look at other opportunities. So for now, I'll be passing on Tesla. However, Tesla had some negative news. Two die in a Tesla car crash in Texas with no one in the driver's seat. According to the police, the Tesla Model S was traveling at high speed when it failed to negotiate a curve and went off the roadway, so crashing to a tree and bursting into flames. Now, after the fire was extinguished, authorities located two passengers, with one in the front seat while the other one was in the back seat of the Tesla. Elon Musk has responded that the autopilot was not enabled in the Tesla crash. He said in a tweet that the data logs recovered so far show that autopilot was not enabled and this car did not purchase FSD or full self driving. This Tesla was not supposed to be driverless. Police are still conducting an investigation. And before we go on our last stock to update, please let me know if you like this kind of content where you get regular updates on stocks that you would like to buy in the future. Please let me know by pressing like, hitting the like button. This helps the channel grow and it signals to me that you like this kind of content. You can also comment below. Which of these stocks do you plan to buy in the near future? Or are there other stocks that you would like to buy in the future? So would you like to buy Amazon, Apple, Google, Netflix, or Tesla? Or maybe the last stock that we'll be talking about? Or do you have other stock ideas that you would like to cover in this channel? So let me know, hit the like button and comment below. So moving on to our last stock update. GM builds their second EV battery plant and their cruise robotaxis are going to Dubai. So GM and LG are spending 2.3 billion on their second EV battery plant in the US. So GM and LG work together on their Ultium batteries, and they are upgrading their battery capacity, which is very, very important. So with electric vehicles, it's important that you have enough batteries. That is one of the limiting factors in the expansion of electric vehicles right now. The plant will be to support production of GM's upcoming Cadillac Lyric crossover and other future EVs. And battery cells are crucial for automakers. So it's a good move by GM to increase their battery capacity. Also, the GM-backed Cruise is set to expand self-driving operations to Dubai in 2023. So currently, GM is operating in San Francisco, but they have just entered into an agreement with Dubai, to bring their self-driving operations there. So this is huge thing. If they're having difficulty, expanding in the US because of all the regulations, so it's good to have this deal with Dubai, and they're going to become the exclusive robo-taxi provider through 2029. So they will have a 6-year exclusivity. If we look at GM stats in eToro, GM is currently at $58 per share, but there is a consensus strong buy among 13 analysts with their price target at $68.15. So that is about a 16.30% upside. So just personally, I believe that currently GM is a better buy right now, but in the future, if there is a drop in price in Tesla, then I will buy into Tesla. I just missed out last year. So again, if you like getting updates on stocks that you love to buy or would you like to follow, please make sure to hit the like button to help the YouTube algorithm, to help the channel grow. And also, if you're not yet subscribed, please subscribe to the Dealmaker channel. We talk about investing in multiple asset classes like real estate and the global stock markets. Feel free to check out our best stocks to buy playlist. And I hope that you continue investing because it's always a great day to make deals. And I hope that all of your deals will push through. See you in the next video.